Hello traders and welcome to today's video. It is called Support and Resistance Secrets. My name is Yaroslav Burchenko and I will help you discover how to draw support and resistance correctly and how to tell when to trade the reversal or to expect a breakout. So it's a very important video and I want to share with you three things. You will learn first how to draw support and resistance the right way. I mean, most people pay thousands of dollars for this information in a professional course, and I will give it to you for free. Number two, you will learn when to trade off of support or resistance. I will show you what the market structure looks like and what market structure will hold. Also, we will learn when the level will break so you don't get caught on the wrong side of the trade. Alright, so today you'll learn all this and more, but before we do that, make sure to hit that like button. If you're not already a part of our community, go ahead and subscribe. Have you done it? Alright, let's go. Let's get started. So most traders learn this early on, right? Support and resistance is one of the first things that they learn, and they still get it wrong. The most common mistake is people draw too many levels. They have too many indicators on their screen. And so let's get rid of pivot points for a sec. Right, so here we have the horizontal line indicator. Alright, they have these lines all over their graph. And it's just too much. It's just information overload. And right, there's just too much going on the screen. Too many indicators on your chart. You know, it's something that will distract you from making the important decisions that you really need to be making, right? So drawing too many levels is what I want to save you from today. But besides that, how do you draw support and resistance correctly? How do you draw? What's the first thing you need to do? Well, the first thing, and write this down, is you need to zoom out. The more information, so here we have the graph zoomed out to the maximum, and you can do this on the hourly time frame, you can do it on the daily time frame. We're gonna stick with 1 hour and 1 day today, just so that we can, you know, fit into as many strategies out there as possible. Alright, so the first thing you want to do is zoom out. When you see the big picture, it's easier to notice patterns and they make more sense to you. And so how do you then draw the levels? Well, you draw what sticks out to you. So number two, draw the most obvious levels. If you're wondering to yourself, is this level, is it not, then it's probably not. Just ignore it, okay? So what does that look like? So here we have one of the most popular, the most popularly traded financial instrument in the world, the Euro USD. I'm going to go ahead and make myself 5 lines. So just the most obvious levels, and then I'll teach you guys how to adjust them. That's going to be number 3. You want to adjust the levels. There we go. Is this the last one? And then we'll put one more right at where the price action is. Okay, so that's it. Step number 2, draw the most obvious levels. And step number 3, make sure that your lines touch the largest amount of areas. We'll start with the bottom one, this next support. This is going to be the following support that we're going to expect. Notice that I didn't draw on the very highest extremity. You want to be drawing this to the level where it touches the most areas. So we have this line represents an area, and so when you see these lines, this is going to be an area of expected business. This is where traders conduct a lot of business, right? This is where buying and selling goes on and where price turns around. So here we have 1, 2, 3, 4, 5 touches to this support line. It's a very important, very obvious level of support. Then we're going to take this line a little bit higher. We're going to move it up just a little bit so that it captures some of these other moves that we saw previously. Remember, this is the hourly graph, so this was only a few days ago, right? Or a week ago, excuse me, a few weeks ago. So then we have this line up here. Excuse me. Let's go ahead and take this line and drop it down to this level. So this is kind of the medium point of the last 2 weeks. And then we have this next level of resistance. We're going to drop it down just a little bit more because I really want to be trading within this channel. The Euro USD is going through some calibrations in its pricing. It recently dropped down to parity right here at parity 1-to-1. And then we have this next level, and then this highest level of resistance, I'm going to drop it down just so that it captures this head and shoulders pattern right there. So in a nutshell, that's what you want to be working with. I have these levels that are within a channel, right? This is the channel that we are most likely going to be trading in. We have the next level of support that we're expecting, and these are all the steps you need to take. Let's go ahead and do this same process one more time. Say with the Dow Jones, the US indice of the Dow Jones. So first thing you want to do is zoom out as much as you can. Then go ahead and draw a few horizontal levels. And they draw at the current price point, if I'm not mistaken. Yep, there we have it. So zoom out a little bit and then go ahead and just drag out your levels to the top, to the bottom, the next level, the next level. I'm just doing this really quick. You guys can see that it doesn't have to be something that's very tedious and take a long time. This is the basic steps that you need to take when initially analyzing your financial instrument that you're going to be trading for the day. Oops. All right, and then we'll make that channel there. Okay, so just doing a little bit of adjustment. I already incorporated as many levels as I could touch, but you want to make sure that your lines are touching as many levels as possible. Now you don't want to just put it like this, right in the middle of everything. Although this does look like a good level, but I'm going to be teaching you how to analyze these wave patterns, how to analyze the market structure and what the different candlestick patterns mean. So this is a very basic and simple support and resistance of the Dow Jones on the hourly graph. And so this is again a few weeks. That's it. That's all you really need to do. We went through the Euro USD, we went through the Dow Jones. We'll do the process one more time because it's super important. Once you learn everything, it's like seeing the market in a new way. Let's have a look at the pound dollar. All right, so once again, I open up my indicator window, put on 5 horizontal levels. All right, and then just drag them out. Here is our support. And then here we have our levels of resistance. This is a very important level right here, this top one as well. And then there we have it. All right, there we go. Let's go ahead and adjust it now. The third and final step is adjustment. And once again, you want to understand that this is a level of an area of support and resistance. So what in reality, what I see when I look at this graph, let me go ahead and show you guys something real quick. So if we're just analyzing this area right here, all of these green lines, what they are in reality is areas. So this is an area that we're trading from. This is also an area that we're trading from. This line, oops. This line is also an area that we're trading from. So in your mind, when you visualize the graph, when you try to understand where the price action is going to go, you want to understand that this is a level and it's not a specific line, right, that price will touch. It may sometimes pierce through. It may not reach it at another time. So there you have it. You've learned how to draw support and resistance lines. We went through 3 examples. Let's move on to the big question. When will price reverse from your support and resistance level? that's what we want to find out. We want to find out when this level will hold and when will we see a breakout. So the two things you want to pay attention to. It will be a reversal. There's a high probability that it will be a reversal if we have large body candles going in. So you see how we have large body green candles going up higher? That's what I mean by strong, large. The larger the candle, the better. Right? We move up to the level, price reverses from it. Another strong move, we have this large green candle that symbolizes to us that soon we will have or we could have a reversal. Let's have a look at another example. This one is a little bit trickier, gold, and I will show you guys what the textbook. Actually, let's go back to the euro dollar. We already put our support and resistance levels in there. All right, and so here we have these large, massive moves. Large green candle, the level's going to hold. There's going to be strong price rejection in the form of an engulfing candle, right? This big red candle is confirming that we are going to have a reversal. And you can also find the likes of this, a shooting star, or a hammer pattern. Here we have a hammer pattern with this red candle. That also symbolizes that we're going to see a rejection and price is going to go in the opposite direction. It's what you want to see before you enter the market. Before you enter in a position, you want to see that strong price rejection in the form of candlestick patterns that confirm, that move was rejected, right? The larger the candle going in, the better. The longer, another pro tip is the longer period of time that has passed, the better. So here we have 1, 2, 3, 4, 5 hours that price spent hovering around that level. We're going to see a reversal in the opposite direction just because a longer time period has passed. And I'll tell you guys why, right? We have traders that trade on the 1 minute graph. We have traders that trade on the hourly graph. And then there's traders that trade weekly or trade the daily graph like I'm showing you guys here. And so it takes time for the candles to materialize, for those longer period trades, for candles to close in order for them to make a decision. And so that's why you want, if more time has passed since the level has been initiated, then we will have a reversal is more probable. And that's all this is. Trading is a game of probabilities. So I want to show you guys some unilateral consolidations. Actually, I want to draw it out for you. So here we have the logic behind this move. This is the price action, right, that we have. For buyers to get in, right, they wait for the lowest level here, right? This is going to be their entry point. This is going to be their entry point. And the sells, the sell stop, or if say you're selling, you're going to have your stop loss, be somewhere up around here, right? So there's this large swing. Traders have the opportunity to buy at the very bottom. And if you're looking for a sell, right, you want to keep in mind where that buying pressure will come from, right? So I'm looking for a sell, right? And the market is behaving like this. I'm going to be selling from here, right? Gonna be entering the sell position right around here. And where are the buyers going to likely come in, right? They're going to come in at the bottom. And it gives me that opportunity to trade the entire channel. But I'm also aware that buyers are not likely going to come in right in the middle of, like, say, somewhere around this level, right? There's just was no price action to confirm that. Now, think about it like this, right? We're starting the next move up, but it's looking choppy. It's looking like this. And I'm still looking for the same sell. I'm looking for a sell opportunity somewhere around this level. But where am I going to meet resistance? Where is it likely that buyers could step in? Well, they could step in around at this level. They could step in around this level. They could step around this level. So a lot of opportunity for me to lose my trade. Lots of opportunities to get in, for buyers to get in and ruin my trade, right? For them to push the trade against me. And so this is what we're looking for. When we are looking for price to bounce off of a level, you want if you want that market structure to really hold, you want big, large moves, right? These big candles, they don't allow for buyers or sellers to mess up your trade. So that's why it's better for more time to pass, and that's why it's better for a big, strong move into market structure. And when I say market structure, all I mean is the support or the resistance and support levels right here. I know we've covered a lot of theory right now, so let's go back to the markets and look at some examples. I want to show you some examples of price. Like here we have a strong move into the level and then a reversal. Another strong move into the level. We have a big candle and then a reversal. Let's have a look at the British pound. Looking at the British pound right here, we see a similar picture. Massive move. Oops. Massive move into support, and then we have a reversal. That when you see a strong candle move into a market structure, there's a very high probability that it will reverse. Price reverses relatively quickly after a big, large, one-sided move. All right. So here we have moving into market structure, big, long candle, reversal. See some good examples as well. You want to be picking your trades, right? When there's a lot of chop and some chaos, I'll teach you how to read this in a little bit, in about a minute. But here again, we have a massive one-sided move. As soon as it shows the engulfing candlestick pattern, that's it. That is a market level, and it's going to come through and work for you again and again and again. Right? So having seen all of these examples, let's have a look at a continuation scenario. Right? The opposite. When will price actually break out and continue its trend? So when you're looking for something in terms of a breakout, you do not want to see a power move into market structure, right? There will be sometimes breakouts, and of course the market can do anything, right? But we saw many examples of how that ends, right? When we have a large candle into market structure. Now I'm going to show you a completely different picture. So write this down. The two things you want to see in a breakout, you want price to grind slowly higher. Like this is a perfect example. Slow, deliberate grinding. You guys see, you want the price action to slowly and continuously grind higher towards your level. Higher lows. So again, we have these 1, 2, 3 lows where buyers can step in case we come back down. So higher lows into resistance and then lower highs when we are moving. So this is a perfect example. Again, lower highs when we are going into support. Right here. You want to build up, ideally you want to build up in the form of a flag or a wedge pattern that can also be supported by a moving average. You can add a moving average indicator, and it can be any moving average, 10, 20, 50. They will work to support your idea. So kind of this consolidation after the breakout was another big clue that, hey, we still have more room to go down. And then only after this kind of sudden drop with these reversal patterns. Remember, this is what we want to look for when we understand that, that level has now held. So let me show you what I'm talking about. It's basically one side getting weaker while the other side gets stronger. All right, let's have a look at the main breakouts of the last few months, the USD JPY. It's actually a poor example because fundamentals really show what that looks like. But again, if you want to see, so let's draw out these levels on the hourly graph. So some horizontal lines. All right, so we have this level here. I'm not going to touch that top level just yet, but we do see that there could be more upside momentum. And then we'll also look at this currency pair on the daily graph, which is also important. All right, there we have it. And then I'm just going to adjust the levels to touch as many points as possible. I was pretty good at putting these on actually. All right, so here we have several breakouts. Let's analyze this trend. So what price is actually doing is constantly putting in higher highs. And if you've been following the Japanese yen at all, you will see, well, let me show you. You'll see that on the daily graph, there have been massive continuous breakouts. And so I just want to drop down a little bit to the 1 hour graph just so that we can see what a breakout looks like. Or what the market structure. So again, we're zooming out all the way, and I'm going to draw some trend lines. All right, let's take this space right here, this chunk of graph data, and what I want to direct your attention to is the higher lows. So looking at the market structure, right, we're constantly putting in higher lows, and that's very indicative that price is going to continue up higher. And we've been doing this from this level right here. Right, we had a massive candle down. It was thwarted. We have this candlestick pattern right here indicating of uncertainty. And then we have this slow grind higher. This candle did shoot up, and look what happened. And immediately after this big market move, it was met with resistance. But the lows kept getting higher, and this slow grind, we can kind of see it throughout the picture. So that's what you want to be looking at. Let's have a look at another example. It'll show you a little bit clearer. Let's have a look at the daily graph because it's also important. This slow grind higher is indicative that we are going to have a breakout. And remember when I told you guys we want to be looking for a wedge pattern, so a buildup in the form of a flag or a wedge pattern, which is supported by a moving average. Let's go ahead and put on the 10 period moving average, and you'll see that these little levels of buildup. So this is a flag pattern, just so that you guys can visualize what I'm getting across to you guys. So right here, this is our one flag pattern. This is the next flag pattern. So that's what we're looking for, and the 10 period moving average here upholds this level. So it's another confirmation that we are going to have a breakout. So one more example I want to get across to you guys, the Canadian dollar, US dollar CAD. Another currency that on the 1 hour graph has had a lot of breakouts, or a lot of levels being taken out. So after the move higher, we have a massive reversal candlestick pattern, and then price slowly starts to make new lows. Here we have lower lows, lower highs. There was a reversal because this is a level that price was kind of jiggling around at. If we just draw them out, you can kind of see that this is what the short-term levels look like here. And then price grinded lower and broke out. So other levels that we had that we could have been using would have been this level here. And again, what did price do? Slowly but surely, it grinded higher. So that's what a breakout would look like. That's what you want to be trading if you're trading a breakout. And that's one of the ways to use support and resistance levels and price action. Just simple, clean price action can really increase the proficiency of your trades, the expectancy, so you'll have a higher percentage of trades that are in your favor. So now that you're proficient in price action analysis, you will know when to sell. You'll know that you do not want to buy here at this level. So you don't want to be like, oh, the market reached this level, it will reverse from here. No, don't do that. It will be painful, trust me. The 10 period moving average right here, the SMA is confirming that we have this market buildup, right? Price action isn't even reaching it. And so there will be a breakout lower to the bottom. Can the market go against this resistance? Can it, reverse up to the top side? Of course it can. The market can do anything. But we're again dealing with probabilities here. The kind of price action that you see here, it happens for a reason, right? There's bullish pressure. Buyers are not stepping in, or if they are stepping in, it's really weak. That's the reason for this market structure. So once again, let's recap. Drawing support and resistance levels, you want to you want to first of all zoom out, and then you want to draw out the most obvious levels. So here we are, just drawing out the most obvious levels. It doesn't have to be neck-breaking research. You want to draw out the most obvious levels and then adjust so that as many of the levels have been activated. That way that level will hold more significance to your trading. It'll be a stronger level. So support and resistance. Look for a strong move into the market, right? We have a strong move down. One single candle, three long candles, large body candles, and then let time pass. We have a few hours of trading here. Then you can enter into that level, and it'll be a higher probability that the trade will be profitable for you. And then we have a breakout, right? How does a breakout happen? Like this massive. You want a slow, steady grind with higher highs, higher lows, building up that market into that level. And here after the big candle, the following candle was not a reversal pattern. In fact, it was a hammer pattern that indicates price might go even higher. So that's it, you guys. There you go. If you like this video, you may like some of the other content that we make. Make sure to subscribe to our channel. It's called Olymp Trade Global on YouTube. Please hit that like button if you want more useful videos like this one. And that's it for today's video, you guys. Good job for those of you that stuck through it in the end. You're now much better traders than you were when you started watching this video. I hope that it brings you more success in the future. My name is Jaroslav Burchenko, and together with Olymp Trade, we wish you guys good luck trading out there. See you all next time. Peace.